In today's fast paced world, we need life insurance more than ever. Life insurance plans not only protect families from unexpected mishaps, but also are seen as a crucial part of our investment portfolios. Therefore, it is very important that we buy the best plan for ourselves and our families. And when I look around, I see numerous life insurance product communications from multiple companies. And it is so confusing to find the right one for me. Hi, I'm Meera, your host for this episode of Financially Speaking Conversations powered by IndiaFirst Life. And to get a clear understanding of different types of life insurance products, I've reached out to Mr. Bikash Choudhary. So stay online to hear about the single most important factor about life insurance purchase that you need to know today. Mr. Bikash Choudhary is the Chief Actuarial and Governance Officer at India First Life Insurance. He has a rich experience of more than 20 years in the financial and life insurance sector. Welcome, Bikash.
Thank you, Miriam. Be happy to help you understand different type of products in life insurance. You correctly mentioned, right? Customers do sometimes support with multiple advertisements of life insurance product that may confuse them from choosing the relevant product for themselves.
Great, okay. In that case, let's get started. What are the basic types of products in life insurance? Can you help us understand that?
Sure. Before I jump to that, let me talk to you about the uniqueness in a life insurance product, which other financial instruments cannot offer. Right. So the first is clearly there is a financial protection, the protection against death, disability, critical illness, or any kind of a health indemnity. The other, which is unique in a life insurance product, is something called as long-term guarantees. So guarantees amounts. It can be lump sum amount, a significant amount at the end of the policy term. There could be series of income payments or an annuity or a pension as long as the customer lives. Regarding your question, yes, about how to understand the various type of products, effectively all life insurance products are divided into two parts. Protection plans, which is a, we call it term plan as typically being called. It's the most basic form of insurance. It says there is a guarantee amount which will be paid to the nominee in case of unfortunate or untimely death of the life insured. Nothing is payable in case the person survives till the tenure of the term. There could be other protection plans again within this. For example, you can have critical illness, an amount payable on a lump sum again, as a lump sum amount on critical illness. That's on the protection. Then there is something called as other than protection, which is savings. In a savings plan, there is certain amount of coverage and benefits provided, and there are financial goals. Basis the financial goals, you get certain returns as part of your survival benefits. This could be either be this called typically the savings plan would be endowment plans, retirement plans, child plans, ULIPs, money back, anticipated endowment, whole life, or even annuity. But effectively, they are somewhere or the other kind of savings plans.
Great. So, do you mean to say that all these saving plans are essentially the same?
No, not necessarily all these. So the first, you're right, on the savings plan, there is various different plans. These are the way these plans are curated are more towards reaching a particular need of a customer and trying to meet those need of the customers, right? So a plan, it's a very simple. So if we talk about term plan, when we start about a term plan, there is a term plan which says if you have a particular period on which you have taken a cover, if something happens to you on a particular event, say for example death, you will get a money on death, and if you survive till the end of the term, nothing happens. Just putting to this is something called an endowment, which means if you die, you will get something, but if you survive till the end of the term, that's you will get the money. That's typically an endowment. Again, if a term plan where there is no term, and you survive to you, and of course as human beings, we are not immortal, so we will die someday. That's called whole of life plans, which means you will get a guaranteed amount.
Yes.
The timing is unknown, the amount is known, and which is where you will die at some point. That's a whole life. In your typical endowment plan, which has some money to be paid on survival at the end of the term, the insurance companies make plans curated based on the needs of the customer. They could pay some series of income payments and a survival benefit at the end. They could put some money backs into it. It could be called money back plan, income plan. It could also be linked to your child's needs, education, your child's marriage, and they would provide certain series of payments which would match your need. right? And those are typical saving plans. That could also be annuity, which is more like a income plan where you get an income for whole of your life. In that, this typical option is something called ROP. Everybody uses that. Actually, nothing but your return of what you paid at the start. So in case you die, you will get back your money. But if you survive, you will continue to get income payments. That's a typical annuity plan.
Fabulous, Bikash. Can I ask? I feel like there's one more plan which comes up time and again, but we seem to have not discussed it, and that is a ULIP. Can you explain to me what is this ULIP and how is it different than what we've already discussed?
Perfect. So to recap till now, the first essentials typically in life insurance products, what do we have unique? There is protection and there is guarantee. What type of plans there are? There is a pure protection plan. There are various savings plans. And in the various savings plan, you can have endowment, money back, income stream, but effectively they are all various different series curated or tailor-made to customer. Each of these plan can be prepared in certain platforms. The typical two kind of platforms are called non-participating plan, and the second type is called ULIP plans. So typical non-participating plan is such where all the benefits are guaranteed. So for example, your term plan is a non-participating plan. Everything is guaranteed. Your typical annuity plan is a non-participating plan. Everything is guaranteed. A ULIP plan on the other side is where all the benefits are linked to the market, where your investment returns are performed based on link of the market. It's called ULIPs. Well, however, the death benefit is guaranteed in ULIP. However, the other benefits which you will get as savings are not there. Along with that, I would like to add in this, since I've mentioned two plans, one which is complete guarantee, and I also mentioned a plan which is completely non-guaranteed. Insurance products do provide basis the risk appetite of company customer. There are one type of plan which sit in between. These products are called participating plans. They are defined as they participate in the profits of the fund. The only demarcation to that is in the word bonus will be there in that particular product. The bonus are shared as 90% of the surplus shared back to the customer. There is a minimum amount of guarantee. Every year, a customer will get a discretionary bonus, which is not guaranteed. However, once bonus gets declared, it's called guaranteed. And over time, the value will increase as and when every year on year, the bonus gets attached to the particular policy of the customer. So these are typically three plans. A ULIP, market linked, a guaranteed, non-participating, and something in sitting in between is participating, which provides some minimum guarantee, and then over and above bonus is being paid year on.
Great. So, Bikash, have I understood this correctly when I say that if I want pure protection, I should look for a term plan? If I want to meet some financial goals that I may have, I should look for a savings plan that will pay out incrementally in some form of guaranteed manner. And if I have the risk appetite, I could possibly go for a ULIP plan, which will give me some market linked returns. Is that the right way to understand this?
Yes. So when we take pure protection, not only you can term plan, you should along with that, you might be able to attach something called as critical illness or a disability. Now, unlike a Mediclaim, which hospitalization cover is what covers for your hospitalization expenses, a critical illness benefit offered by life insurance companies is more like an income replacement product. The fact that the lifespan is reducing the moment you will have an illness, you will not be able to put the same amount of effort in your job what you would have done prior to the illness, effectively means you have your income reduced, which is not covered effectively in your Mediclaim expenses. The fact that in the initial period of your illness, you may have to not be able to work for 3, 4, 5, 6 months. A lump sum amount being paid, a one-time payment, irrespective, no linkage to your hospitalization expenses on a defined critical illnesses such as say cancer or heart attack or renal failure. In case a particular event has happened, you meet the conditions, you get a lump sum money. That is used as an income replacement. When it comes to savings, yes, you should buy a savings plan depending on what needs. Can be income, can be series of income, can be lump sum at the end. Depending on your risk appetite, you might go for UL plan. It is also a function of age. You should choose the funds which are right for you. Fund can have as high as equity exposure of 80-90% to a fund which has can have as high equity bond exposure about or debt exposure which is less riskier about 70-80%. Basis your risk appetite. Or you might want to choose a fund where you want some amount of guarantee in a product, but you also want to touch upon a little bit on the upside of If the company's fund performs well, then you might go for a participating plan where you will year on year get bonuses.
Great. So, what I've understood from this now is that there seems to be an insurance plan for all my financial needs. And I should be looking at a bouquet of products to meet my financial requirements across my entire lifespan. I just have one more question, Bikash. If I was to go out to purchase a insurance policy today, regardless of the type of policy I'm buying, what are the top three things you would ask me to keep in mind? Or four things you would ask me to keep in mind before buying this policy? Or what are the things I need to check?
I'll probably summarize this into much easier for you. I've explained you various products. I think the one and most important and the only thing you need to look at is something called as illustration or benefit illustration.
Okay.
It is given to you at the time of sale of the product. It is part of your integral part of your policy document which you receive after you have bought the policy. You also get a free look period of first 15 days or 30 days, depending on your mode of buying the policy. In that illustration contains all information. It gets a tabular form of a table. There is a table in which in tabular form you will see right over there, it's mentioned over there, what premium you need to pay, for how many years you need to pay the money, what benefits you will receive, for how many years you will receive those benefits, when will you receive those benefits, and most importantly, are your benefits guaranteed or not guaranteed? So illustration is the one. It's just a very simple two-pager, one or two-pager document which you need to go through to understand your life insurance.
Fabulous. I think that answers my question very succinctly indeed. So, my single checkpoint for purchase of any life insurance policy should be the benefit illustration. And I think that brings us to the end of this conversation with Mr. Bikash Choudhary. Thank you so much, Bikash, for your time with us today. I'm sure our listeners will agree that this is a great starting point to pick the right product for themselves.
Thank you. It was a pleasure to discuss with you such crucial financial product into the customer's lifespan. I hope it helps to get better understanding of different type of life insurance concept to our listeners.
Yes, today's conversation has definitely given everyone a clear idea about different types of life insurance products and their relevance in our lives to fulfill our dreams while securing our finances. Thank you for listening. You can find more such episodes on YouTube and on your favorite podcast app. Keep listening.